Ireland's economy is on the up, and with Grade A office space and residential markets tightening, the property market looks well positioned for an upswing. In the State's Gazette's first question time event in Dublin at the Royal College of Surgeons, our eminent panel of experts put the country's property sector under close scrutiny. With investment activity stronger than anywhere else in the Eurozone, how long could that last? And what effect would it falling have on Ireland's property market?
What do the panel think is going to be the future of this foreign investment in Ireland? Is it going to continue into the long term, or will people be selling out in 1, 2, 3, 5 year terms?
Yeah, I suppose if you look at most of the capital that has come in today, there's been private equity, which tends to be towards the shorter end of the spectrum. You would like to see longer term capital coming in. You'd like to see the European core pension funds coming in, because if we can get that capital in, it is longer term.
I mean, the first thing I'd say is that I welcome the foreign equity that's come into the market, because the first thing that it did was, I think it recapitalised the market when there were no transactions and there was no capital in the market back in 2009, 10 and into 11. And certainly speaking from Bank of Ireland's point of view, there are two arms to our strategy in property in Ireland. One is that we welcome inward investment and we will support that, and we're glad to see it. And the other is that we recognise the need to make sure that the indigenous sector comes through this as well, and that there is a wave of domestic buyers that will be there, and the domestic investors.
To my mind, it comes back to the strength of the national economy and to the strength of occupier markets. And in that regard, I mean, I think Ireland is on a positive trajectory. I mean, that is clear that we have made good progress in restoring the public finances. I think that has been noted and is reflected in bond yields, which in themselves are a reflection of the international perception of Ireland as an investable proposition.
The issue of Dublin's branding also came under scrutiny, and with it the inevitable question of Ireland's controversially low corporate tax rate of 12.5%.
How does the panel feel Dublin should be marketing itself? Should it be as a gateway to Europe, or as a tech city as we become known for, or perhaps a global hub for innovation, for example?
I think the difficulty for Dublin and Ireland in general really is that our USPs are really things that it probably doesn't behove us to talk about. That is the corporation tax rate, and the fact that we have an English-speaking population, the only English-speaking country, in fact, in the Eurozone. Given that context, I think really the way we need to brand ourselves, and the way we have been branding ourselves, is to just roll up our sleeves and get on with the fiscal adjustment programme in a workmanlike fashion, and that's what we've been doing. So I think, in a sense, we've been doing all that we can do in that regard.
It may not be a brand, but I think it's something that a lot of people are very proud of over the last number of years in Ireland, that we did get our heads down, roll our sleeves up and get on with sorting out the situation we found ourselves in. And certainly that the IDA, if somebody from the IDA was sitting on this panel, and I think we've probably all had the benefit of listening to them the last while at various things that they've spoken at, they've done a hell of a job in terms of creating a brand for Ireland, and that is, it's a brand which is to do with technology, a modern city, and one that is a place where people want to and do come to set up their businesses and to work and to attract employees and so on.
Outside of Dublin, did the panel believe there needed to be incentives to get the recovery going in the property market?
As somebody based in Limerick, I'm interested in the panel's view on the recovery outside of Dublin. Do they think there are any kind of incentives or stimuluses that are needed to try and get recovery going in the property market outside of Dublin?
I do think the regional cities will start to come on, and there's definitely some supply shortages beginning to arise in those. But you're going to need sustained economic growth over a period to see it spreading out, I think, from those regional cities to other parts of the country.
The regional economies of Ireland are catching up and have caught up to a certain degree with Dublin. National employment growth last year was 3.3%. It was only 2.8% in Dublin, so employment growth is stronger outside Dublin than in Dublin. So my instinct is that you would be. I think it will, to a certain extent, regulate itself.
Because Ireland's bad bank NAMA is a major player in the property market, its role in the sector and how it planned to operate in the future was of real interest.
What asset classes you see coming forward in that, when you see it happening and how you see it being structured?
Okay, well, I suppose as to the when, the answer is really when viable opportunities arise. But looking forward and looking at the opportunities that are going to, I think, increase over the short term, there will be circumstances where there isn't an incumbent party to carry out the development that NAMA can support, and then those are the circumstances where you see a joint venture opportunities arising, probably primarily in sectoral terms in Dublin residential sites, house building, but also now with the approved SDZ within the Docklands area. So I think strategic sites in the Docklands area would be where you might see these arising, and also some particular Dublin residential schemes.
And might some of those be imminent?
They might.
Which ones?
Tell you after.
So what of the future? Where will the Irish property market be in 7 to 10 years?
I find like 12 months is a gasp. Like, for 2007, I thought I understood real estate. 2008, I realised that I didn't. Where it's going to be in 7 or 8 years, I genuinely haven't a clue. I hope that IDA continue to be successful because that's been such a big driver, and I hope that the economies in Europe don't go through the roof because interest rates will crash us.
My own view is that office cycles tend to last somewhere between 8 and 12 years wherever you go in the world, and there is just a huge volume of literature to back up that point. So I imagine we're at the start of a cycle and it'll be a pronounced cycle. That's my own view.
Well, in 7 years, I think I could make one prediction, and that is probably that I will be out of a job, and the NAMA will be NAMA will have done its job, and if you believe the CNAG, as we all do, met its targets. So that's one prediction I can make with a reasonable amount of confidence.
Where will the world be in 10 years' time? I don't know, but I'm reminded of something that someone in America said to me back a few years ago. They said, it's just real estate, Paul. It's got 10-year cycles and 7-year memories.
With strong job prospects and continued rental growth forecast, Ireland's property sector looks well positioned to put a difficult recent past truly behind it. Karen Day, reporting for Estates Gazette.